Greetings, fellow wealthologists. I'm Chris Hobart, and today we're going to go on a journey of wealth management and financial planning, specifically looking towards 2024. Now, specifically, I want to delve into some of the intricacies we're seeing right now due to the biggest, most profound global interest rate tightening cycle in over 3 decades, which has created what the media is calling the new economic order. So this is the first Wealthologist of 2024. Welcome to it. Let's get right into it. So over the past couple of years, central banks have orchestrated a mission to beat down inflation because, man, it was getting crazy, right? Now, this mission, it's deemed accomplished at this point as data is showing that there's been a dramatic decline in inflation across developed economies. Now, this shifting landscape is what we're calling, or what the media is calling, the new economic order, which presents us some challenges, but it also gives us some unique opportunities. So I want to dig into those nuances that might help shape your financial strategy in the coming year or years. So when we look at economic charts right now, there is a slowdown that is signaled to be looming out there. But I want to make sure that we're distinguishing between the broader economy and financial markets. While leading indicators are suggesting some sort of a potential impact, be it a soft landing or hard landing, historical dynamics show us that the market often reacts differently, which means that we've got to have a nuanced approach when it comes to investing, which is balancing caution with strategic foresight as we navigate some of these uncertainties or this evolving economic landscape. So looking ahead, the recent shift in the Fed's stance on interest rates, it is a game changer because as we're looking forward, there's a prospect of lower interest rates on the horizon. In fact, traders are forecasting a 96% chance of a rate cut by May. Now, this shift in interest rates going down could unleash a wave of massive amounts of cash back into the stock market. Why? Well, interest rates drop, money markets and CDs pay less, people look for yield, they go to the stock market. This is where there might be some pretty unique opportunities for astute investors to capitalize on potential market dynamics. Now, history provides some insights around this. And what history shows us is that after a year of a downfall with a year of an upswing of 10% on each side, the likelihood of an increase the following year is pretty great. In fact, the statistics show us the average gain is 11.7%. Not a guarantee, by the way. Now, as we approach a presidential election this year, historical data also tells us that really we should be focusing on how investors react in a presidential year as opposed to the election itself. And you see that in those slides that I sent you last week. Now, our plan at Hobart Wealth, it actually involves crafting what we call a comprehensive playbook for navigating this new type of economic order. And each chapter of this financial playbook is designed to provide strategic guidance tailored to these evolving conditions. So what are they? Well, first, we really advocate for solutions that are going to offer amplified upside returns coupled with some sort of a downside protection built into them. Second, we want to begin to narrow the range of outcomes to enhance probability of success. A third thing we want to do is encourage really how do we see some opportunities presented by high interest rates before they vanish. For example, like right now, high interest rates, not a good time to refinance your mortgage, right? But there are opportunities. You could be locking into some higher interest rates. You could be refinancing an old annuity that you have, even if it has surrender charges or has lockup provisions. Newer versions of that might be really beneficial to you. Now, the fourth chapter of our playbook, it's where we advise investors to emulate institutions, which means you got to broaden your diversification in a case like this to help reduce risk and maybe go towards some non-traditional larger capital allocations. Finally, the final chapter urges investors to stray from the herd and begin to explore more unconventional solutions. The concept here is by fishing in different ponds, investors can discover unique opportunities from generating high fixed income for several years that's unaffected by interest rates or the economy, to integrating cash solutions offering better yields than traditional bank CDs. The thing is, we've got to think different in an economy like this. In this new economic order, the old playbook, it may not yield the same effectiveness as it has in the past. And that's why we've meticulously crafted a new playbook, one that's positioned for the future and where we are today and where we're going into the future. Opportunities for long-term investors, I got to tell you, they've never to me been more exciting because we've got the rise of artificial intelligence. We've got changing consumer habits. We've got dropping interest rates. We've got advances in healthcare. And there's also different energy sources that are coming to the table. So as we navigate through all of this dynamic landscape, unlike we've seen ever, we at Hobart appreciate your commitment to your financial growth. And we're hoping for you to have a prosperous 2024, regardless of what happens in the economy. Soft landing, hard landing, Republican, Democrat, the opportunities for success are out there. Our job is to look for them, to guide you wisely, and to answer any questions you may have. On that note, if you have questions, thoughts, concerns, we are always here to help. Just reach out to us. You know our number, or just email us at info@hobartwealth.com. Have a great rest of your week, and let's all have a great 2024.